There are 3 different levels of pre-approval, and with all of them, I suggest that you gather all of your documents now, get them all together in one place at one point or another during the transaction. Most of them will be required, so you might as well just gather them now. If this is your first time to this channel and you want to know everything about buying and selling homes, click subscribe below and tap the bell for notifications so you'll be the first to know about the latest tips for buying and selling. Hi, my name is Kitty Cheney, owner of Chandelier Property Group with eXp Realty, where we provide brilliant solutions. One way we do this is by helping you understand the process of buying and selling a home, the potential challenges, and the common roller coaster of emotions along the way. Challenges and stresses are reduced and often eliminated when one knows what to expect in advance. We call this sharing the light of knowledge. We've worked with so many people just like you, looking for help to buy or sell a home, and we love to serve. Whether moving in 9 days or 90 days, if you want to feel heard, informed, and comfortable, give us a call, shoot us a text, or send us an email. All of our info is in the description below, so we can help you make a smooth move. Step 1 in the buyer purchasing process of buying a home is pre-approval. You want to talk to your lender as soon as possible, as soon as you've decided that you're ready to buy a home. Don't wait till you're ready to make an offer. Don't even wait till you're ready to look at homes. Call them now as soon as you know that you want to buy a home. Reasons for that? Number 1, you may have an issue with your credit. It happens to the best of us, and this will give you time to clean that up. Reason number 2, you may have some things that you could do to improve your credit, make it so that you could afford an even nicer home, and this gives you time to do those things. So call your lender soon. Now, when you call your lender, you need to be interviewing a few different lenders. At least I suggest that. You don't need to, but I do suggest that you interview a few. And so the types of lenders that you may choose to speak with, number 1, you may talk with a national lender. National lenders may have more options for you. They have larger programs. Small lenders, as an alternative, may have localized incentives. Banks and credit unions may offer deals to their members. And then there are mortgage brokers. Mortgage brokers may have the most flexibility for you to adjust things around to different programs that will work the best for you. Call a few, talk to your realtor, talk to me. I'll give you a few options. Now, interest rates are, of course, important. I mean, very important. But almost more important than interest rates is that you speak with someone who understands you, who listens to you, who explains to you in a way that you understand. This is the biggest transaction of your life in most cases. Last thing you want is someone who says, "Oh, just trust me, it'll be okay." No, you want someone that takes the time to make sure that you understand your options and then helps you decide which of those options is best for you and your unique financial situation. So when you're talking with those lenders, ask questions, ask lots of questions, everything you can think of. And that will help you to determine which of these lenders you're speaking with you feel the most comfortable with escorting you on this journey. Now, many real estate transactions have things that come up, issues that arise, problems that occur. That's why you hire professionals. If the problem occurs with the loan, the last thing you want is someone who just throws up their hands and says, "Sorry, guess you're not going to get the house." No, you want someone who jumps in and solves the problems. I had that experience once, the one and only time that a client of mine has lost their earnest money. Oh, hurt my heart. They came to me with their lender already selected. They knew who they wanted to use. They'd used them before. And they had a rather complex, tricky transaction going on. There was a lot of moving pieces to this one, more complex than most. A lot of red flags. I called that lender every day asking about, okay, I'm seeing this red flag. I'm seeing that one. Is there anything that you're seeing? Is there anything we can do in advance? And she kept telling me, no, everything's fine. Everything's fine. Oh, I saw red flags all over the place. And that lender did do, "Just trust me, it'll be fine." And it wasn't. At the very last moment, a problem occurred, exactly the problem I had been asking about. And it was too late. I tried everything, couldn't save that one. But in most cases, my lenders, the lenders that I have chosen to work with, the lenders that I would refer you to, all of them jump in and solve problems, and most lenders do. But you do want to make sure that you're choosing a lender that will jump in and solve those problems just in case problems occur in your transaction. Now, once you've chosen your lender, it's time to submit the financials, all of your financials, so that they can tell you what you would be pre-approved for. There are 3 different levels of pre-approval, and with all of them, I suggest that you gather all of your documents now, get them all together in one place at one point or another during the transaction. Most of them will be required, so you might as well just gather them now. So docs that may be required include your W-2s, 1099s, proof of any other income that you have, 1 to 2 years of your taxes, any divorce decrees, any alimony or child support. You're going to need to disclose your debts and any payments that you have due. If you are self-employed, there will be additional documentation on your business. If you're close to filing your taxes and you're self-employed, have your CPA draft up those taxes and send them off to your lender for review. They may suggest that your CPA adjust things. When you're self-employed, you of course want to pay as low taxes as possible, which means claiming lower income. But when you buy a house, you want higher income so that you can buy a nicer house. So you may adjust your taxes just this 1 year and get those put together in a draft format, send them over to your lender, and see what they say. Use a secure online portal when you're submitting documents to your lender. Do not just simply email them. Make sure you send them through their secure online portal. That just keeps you safe and your financial information safe and protected. Ask about down payment money needed and how much you're going to need. And if you qualify for any down payment assistance programs or grant programs, ask about estimated closing costs. Closing costs include things like loan origination fees, title fees, prepaid interest, HOA fees, all of that and more. It's all rolled into one lump sum called closing costs. And you've probably heard that sometimes sellers pay for a buyer's closing costs. Buyers and sellers have their own. And sometimes, depending on the market, we can ask the seller to pay for your closing costs. It will vary. But we will discuss that when we're ready to purchase a home for you. You want to ask the lender about your max loan amount. It's typically higher than what you feel comfortable with, but it's good to know what that max loan amount is and what the loan amount is where you feel comfortable with the payments. Then you know if you want to bump that purchase price up a little bit, you know what your max is and what you can push it up to if you choose to. You're going to want to ask about how HOA dues may affect your purchase price. HOA dues are a required payment, and therefore they will affect your DTI, your debt to income ratio. You want to ask how those HOA dues will affect that. If you're looking at condos or townhomes, HOA dues are going to come into play. Even in many single family homes, they come into play. And so make sure that you're aware. HOA dues that are lower, you'll be able to do a higher purchase price. HOA dues that are higher will require a lower purchase price. And you want to know how that affects your pre-approval amount. Now, there are 3 stages of loan pre-approval. Those 3 stages are pre-qualification. That's what you do when you're calling each of these lenders initially. You verbally tell them, this is my income, this is my expenses, these are my debts. And they verbally tell you, well, assuming all that's correct, here's what we could give you a loan for. So stage number 2 or level number 2 is your normal pre-approval. This is when you've actually submitted all of your documents, submitted all of your 1099s and W-2s and taxes, and they've pulled your credit. And now at this point, they will say, this is what we can give you a loan for, because they have verified all of that information. Step number 3, only a few lenders do. This is ADU, or automated direct underwriting approval, where they have run it through the underwriter and you are all approved. Now we're just waiting for information on the home. By doing this 3rd level of pre-approval, you can close on a purchase in as little as 2 weeks sometimes. This can be very beneficial if the seller of the home that you have selected has timing as an important, desirable characteristic of an offer. And so if you're able to close quicker, you may edge out other buyers, other offers on that home by being able to honor that request that they have. So it's really nice if you can get that third level of pre-approval. Now, higher levels, as I mentioned, make stronger offers, not only because you can close faster, but also because the seller knows that the lender has already reviewed all of your docs and pulled your credit. When it's just we could give you this loan, yeah, that's not very strong. The seller is not very confident in your ability to close. And if you're up against multiple offers, someone else with a full pre-approval or that underwritten pre-approval is going to edge you out. So we want to make sure that we get that full pre-approval done, and if possible, the underwritten pre-approval. Discuss any changes in your financials with the lender ASAP, all the way through the process. Any shifts that happen with your financials, talk with them. If possible, talk with them before any shifts. For example, a job change or promotion. You would think a promotion would be awesome, and yay, you've got more income, now you can buy more house. But if we're in the middle of a transaction, no, that can be a problem. As a story for you, a story to share, I had a client who got headhunted and offered an immensely better job, but it was after we were already under contract. And we had to put that off and make sure that we got closed on the new home before he shifted. We had some delays, some repairs that were needed. He had to keep putting off the new job. But if he hadn't put it off, he may not have gotten the house. It was important to keep the same job through that transaction and wait until the new house is closed, and then he could shift to the new job, as he did the day after closing. Now, another change that can occur is increases or decreases in your debt. Leave your credit alone while you're in the middle of a transaction. If you normally buy all your groceries on credit and pay it off at the end of the month, keep doing that. If you don't touch your credit. Don't go buying appliances or furniture, not until we're done and I've given you keys. Don't touch your credit before then. Don't co-sign on loans, none of that. Don't even pay it off. Again, you would think that paying off your credit would improve your credit. That's going to improve your DTI and therefore give you a higher loan, right? Wrong. Don't do it. Do not touch your credit till we're done with this process. I had a seller under contract with a buyer, and that buyer, in the middle of the transaction, paid off all their debt. And we had to delay the transaction, delay the closing by 2 weeks while the lender reran their credit. Don't do it. Don't touch your credit at all outside of what is normal for you. And any changes that you are considering making, talk with the lender. Seasoning is very important. Seasoning is not just salt and pepper. Seasoning is also the down payment funds. Monies that you are putting towards the purchase need to be seasoned, meaning they need to have sat in your bank account for 60 days or more. And the lender needs to be able to see that and track where that money came from. It is so important. Don't move your money around. Make sure that any money that you are applying is in that account, or that it is easily trackable. If you have money hidden under your mattress, get it out now and put it in that bank account so that it is seasoned and ready for the lender to track it. Doesn't matter how much cash you have, it needs to be trackable and thus seasoned. If you are selling things in order to gain your down payment, use Venmo. Don't get cash for the things you're selling. Use Venmo and have clear notes to track it. Even better, get checks. Take photos of the checks, deposit them. Use some system where it's clearly noted where this money came from, and do it as early as possible so that the money is seasoned. And do not move your down payment funds. Another story for you. I had a client who, just to make sure that the money didn't get spent before down payment, pulled it out of the account and into another account and let it sit there until just before closing. Well, that caused a problem because they got pre-approved with the money and now the money was out of their account. It was available, but it wasn't where it was supposed to be. And we had to do some quick logistics at the end. They got an early payroll just in time to make it, because payroll was easily trackable. We got an early payroll, and then the money was able to be counted and tracked for that down payment. So don't touch your credit, don't move your finances around. Just talk with your lender about anything that you're looking to do with your finances before that transaction closes. Now, this whole process of getting pre-approved and getting it all the way to underwritten pre-approval before closing, that can feel boring, but it is a vital way to ensure that the rest of the transaction goes much more smoothly. It's so important. Make sure that you get this step done first. Once you're pre-approved, you're ready for step 2. Step 2 is finding the home. I'll talk to you on the next video. If you appreciated the knowledge shared in this video, click follow and subscribe for more videos on buying and selling homes. If you're looking to buy or sell a home and want to feel heard, informed, and comfortable along the way, comment below, or even better, call me. I look forward to being the brilliant solution you can't wait to share.